Hey, what's going on, guys? This is Terrence Ray back at you with another stock market update. I wanted to come on and talk to you guys, give you an update on the market. We're going to go over a couple charts and we're going to, get you set for this FOMC decision that's coming up this afternoon, which is basically already preset. I think the probability last I looked at it was like 97. Then I heard this morning it was like right around 99% chance that the Fed does nothing, basically that the interest rates will stay the same. However, I think that we'll get the movement in the market after the decision is made, basically when Powell comes to speak. And then I think we're going to get some fireworks after that. If they don't lower it, I expect President Trump to go into bully mode and start talking. And if he starts to chirp, I wouldn't be surprised if we got an emergency cut. That's my prediction right there. 'Cause I think he's gonna start uh, speaking after Powell speaks because he wants the interest rates to come down. And I was listening to something on the All In podcast. Ray Freeberg interviewed Ray Dalio, and Ray Dalio was talking about how maybe I think he said a whole percent lower is what a market where he think the market should be, and he gave some reasons for that. Right, basically, it would be easier or less. I guess it would cost less for us to service the debt that we have, and kind of balance out some other things. But anyway, how can we make that applicable to the markets? First of all, let's go over a position that I do have currently. Right now, I am long the 10-year Treasury note, right? /ZN. This is the Tasty Trade platform. And as you can see, I'm going to remove my Fibonacci or hide my drawings. Now, what we're looking at right now on this screen, I have the /ZN pulled up. We have a shoulder, we have another shoulder, and here will be your head. This will be considered a head and shoulders pattern in the market. And what happens is with head and shoulders, you basically want to see a break of the neckline here. And once you get that break of the neckline, this will be the shoulder. And it is a bullish setup. And actually, this is a reverse head and shoulders because if it was a regular head and shoulders, it'd be up here at the top with a bear signal. This is reverse. So you see it at the bottom. This is a bullish signal. Like once again, real easy to see, you know, shoulder. I'm just drawing it out so it's just real easy to see. Head. Then we come right back down here and then we'll show the other shoulder, right? Shoulder, head, shoulder, neckline. You trade the break of the neckline. Now, I'm already in this trade. I was in it. I actually got in it. Let's go look at the position. I've been in it for 2 days and basically I'm flat. So it hasn't moved a whole lot since I put it on. I sold a put spread, sold the 108, bought the 107.5 right there. And then we're just sitting to look and see what happens. One of the reasons why I did that, obviously, I showed you the chart setup and also bonds have been getting destroyed. This is the bond market and the bond market is down. Now, if I look at the 10-year yield, you'll see it's opposite, right? So here's your head and shoulders on the 10-year yield up here at highs. Now, if we are to, obviously, I'm taking a bet that interest rates will come down. If interest rates come down, yields will come down. Then that's going to show that bonds should go higher. And that's the play there. So there's there are ways that you can trade um, interest rates, instead of just, complaining about them or, whatever's going on. If I can't trade it, I try not to even talk about it because you basically water under a bridge. Is you complain about something you can't control, right? Now, I may come on and do a reaction video to Ray Dalio. That interview is a real good interview. I think they talked about a lot of stuff that that I think that help people understand what's going on with our debt in the United States of America. So next, I wanted to talk about Tesla. Trying to get this mic straight. Excuse me. Let's go take a look at Tesla chart. I actually need to fix my mic, my camera down just a little bit. I'm like, got up. All right, y'all ready? Let's pull up. Let's take a look at Tesla. Now we come to Tesla. As you can see, I got some Fibonacci levels on here. You can see we started this upward trajectory back here in April. And then we got a pop here, another pop there, and then we got a pop all the way up here. I'm going to pull up another. I want to pull up another chart. Bear with me. Swap over. And we're going to go to the daily. I'm going to take this off. Trust me, I'm working towards something. Now, we'll look at it like that. Sometimes it just helps me to be able to see what I want to see right here. Now, see with these moving averages, it just kind of helps me see the peaks, right? And then when I have my MACD up there, now I'm looking for divergence on the MACD, and I don't quite have it on the moving averages on the MACD. Now, what I think will happen with Tesla, I think Tesla, we're going to get a breakdown below this level here, right? Not 100% sure, but you can see we got earnings. Now we got earnings today after the bell. So it could have some magnificent earnings and I could be wrong. All of my analysis could be wrong. That's the thing with earnings. But if it continues like it's continuing, this moving average right here will cross over here, which means the market would have to continue to come down. I see support here around 360. And if it was to break down below there, the market could come all the way down to 280. Now, I would love to be able to see Tesla come down to 280, just me, right? Because then that's a buying opportunity for me. I would definitely look to buy if it was to get down to 280. 360, I don't know. I may put some type of neutral trade on. It just depends, right? But however, I still do think that even this would an Elliott wave, this would be like the fourth wave, right? Generally, you get your patterns. Let's draw a trend line here. See that? Let's draw another trend line here. So we got a triangle. We get these triangles. I look for violent moves out of these triangles. Right. It's just like something similar. I'm gonna pull up Meta real quick. I don't have it on Meta. So let's go to. I can draw it real quick. Look at Meta. I had this drawn. If you've been following the channel, you'll see I had this on Meta. You see this? See this triangle? When you have these build up, it's almost like a build up. It builds up, and then it pops out. Now let's go back to Tesla. Same thing. We got it here. Now it could just come out of here, have blow up the earnings, blow it out of the water, and just go higher, right? I'll miss that. I won't take that trade. Um, but I would like to see it come down here and then give us like come here, hold, and then start this upward trajectory, right? That's what I would like to see. But I still don't either way, I expect a big move here, big move there. So I'll be watching Tesla um probably after earnings or tomorrow. Let's take a look at I looked at bonds, I looked at Tesla, and I want to also come look at the S&P 500. And then we'll be able to let's go back to my other, here we go. Now I wanted to come here and look, and because we see the expected move. Now on Monday, the market gapped down below the expected move. And you see how it came down here below the expected move and then pulled back. Now we back inside, right? We almost got like an inside day. We won't get any large movement today until we get that FOMC decision, which the market already knows what it should be. It's going to be when Powell comes out to talk. That's when you'll get your movement. I'm making a prediction now. I'm telling you, after Powell gets done speaking, then the president is going to make an announcement. Either he'll speak or he'll release something. And then once he releases whatever he says, that's going to move the market. That's what I think is going to happen. So we're going to have a lot of trading opportunities this afternoon in the market. So with that being said, guys, I would be careful. Keep your positionings size small, especially if you trade anything before the meeting, even after the meeting. I know a lot of day traders going to be ready, locked and loaded for that big move after that, especially your Forex traders, currencies, and all of that stuff. Just be careful. A lot of traders get blown out around these days. That being said, guys, hopefully you got something out of the video. Blah, 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 blah. Hit the like button, subscribe. Um, all of this I do live, like even my analysis, everything. I have in my mind an idea about what stocks I want to talk about, but I do the analysis live. Like even as I'm recording the video, like I don't do the analysis and then throw it up here. I let you guys see me do it and walk through it and I talk through it. And then I show you any trades that I'm looking at doing and any trades that I have on. Right. So hopefully you guys appreciate that. Um, and this and that's that. And I'm out. Peace.